Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now historically, the summer months, they have always been considered one of the most lucrative periods for commodity traders. So far that trend, it is definitely living up to expectations. There's no denying that July, that has started off with a bang, bringing with it a series of extraordinary money-making opportunities, from hotter than expected economic data to stubbornly high inflation, a brewing global debt crisis, to rapidly rising recession risk. And just in case that wasn't enough, traders, they're now on the verge of being gifted with even more lucrative money-making opportunities as global policymakers continue to flip-flop on interest rates, which has significantly increased the odds of more monetary policy errors ahead. There's no denying that the previous quarter, that was monumental for monetary policy, as central bankers across the world, they ramped up their fight against stubbornly high inflation, whilst also acknowledging the inflationary pressures could persist for years. That message relayed loud and clear at the European Central Bank's annual forum, where a host of heavy hitters from the Federal Reserve to the Bank of England to the European Central Bank, they signalled that more aggressive action will be needed to bring inflation down to their 2% target. Data shows that every economy around the world right now is fighting significant inflationary pressures due to the effects of the pandemic, global supply chain disruptions, unprecedented monetary policy stimulus, Russia's ongoing war with the Ukraine, and of course the return of global energy crisis, which has flared up again after European natural gas prices, they racked up a triple-digit gain in June, sending prices skyrocketing to levels not seen since last summer. Now, global policymakers, they admitted at the European Central Bank Forum that it may take another 2 years from now to get inflation back down to their 2% target, whilst also warning that although policy is restrictive, it may not be restrictive enough. In other words, setting the stage for a series of further interest rate hikes as consecutive policy meetings in July, September, and potentially all the way through to December, they bring back memories of the serious policy errors made in the 1970s. Similar moves by global policymakers back in the 1970s, that led to a prolonged period of high inflation that required even tighter monetary policy, which eventually resulted in the most severe global recession since World War II. As proven throughout history, the more times central bank they flip-flop on rate hikes, the longer that problem goes on. Inflation becomes more embedded and less sensitive to rate hikes, ultimately making it harder to tame. It is a well-documented fact that global central bankers have never been right on monetary policy, and they have a proven track record of getting it wrong on inflation time and time again, just like we're seeing right now. According to Goldman Sachs, the reality is that we're now in an environment where there can only be three possible outcomes here: persistently stubborn inflation, stagflation, or recession. Each and every one of these scenarios, it presents extremely bullish backdrop for commodities. If you want to know what the markets think about central bank indecisiveness, then you only need to look at data to gauge sentiment right now. Google searches for the phrase "how to trade commodities," they are surging once again to their highest level in more than a decade. Recent data that shows that 1 in 2 people have now turned to trading to protect and diversify their wealth, as well as to capitalize on the magnitude of events that are currently unfolding. And they're certainly not alone. Nearly 3/4 of central banks, they're now turning towards gold to hedge and safeguard against the risk of monetary policy error, which is just ironic because central banks, they're buying gold to protect themselves against the consequences of an economic crisis down the line, which they themselves, they're creating through their own costly policy failures and mistakes. According to a report by the Gold Council, 71% of global central banks surveyed, they said they plan to significantly increase their gold purchases in the second half of 2023 by an estimated total of 700 metric tons, worth 49 billion in the next 6 months alone. Right now, central banks, they're not only net buyers of gold, but also record buyers, and this trend shows no sign of slowing down anytime soon. The bottom line is that central banks, they're buying gold for the same reason as everyone else, to protect their purchasing power, diversify their wealth, and capitalize on high returns on offer in this current economic climate that we find ourselves in right now. Interestingly, it looks like we may be about to find out an even bigger reason why central banks are buying gold at the fastest pace on record. According to to a number of highly reputable sources, including Bloomberg, Reuters, and the Financial Times, the 5 leaders of the group of nations known as BRICS, they have confirmed that Brazil, Russia, India, China, and South Africa, they will announce a new currency backed by gold at the BRICS Nation Summit in August, a major move to challenge the dollar and shield from US sanctions. That in itself presents hugely bullish tailwinds for gold, but make no mistake, this is not a buy and hold market. These exciting and fast-moving markets, they're creating the most optimized environment for traders. So far this year, we've seen commodity markets notching up explosive double-digit gains to the upside and the downside in a single week, sometimes in a single day alone, not once, not twice, but on multiple occasions. So just think about that for a second. In today's inflation adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks around the world, they're struggling to retain deposits, and logically it makes no sense why anyone would want to leave their hard-earned money sat in the bank on a near percent interest rate while simultaneously allowing inflation to devalue their purchasing power when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Right now, we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders wait decades for, because it's times like these that make millionaires and billionaires out of regular people. Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which you've transparently documented through our weekly videos. If you're trading at 1 lot, that's $100,000. If you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures, and we're only halfway through the year. Historically, each time commodities have started the year on a positive note, they've gone on to finish the year outperforming every other asset class out there. These past few months have just been a taster of what is yet to come. If you want to take advantage of these extraordinary markets and huge money-making potential on offer, then there's no better time than now. Go to jointhegoldensilverclub.com to learn how a mentorship program can take your trading to the next level. Investing in yourself is the best investment you will ever make. Your future is created by what you do today. Make investing in yourself a priority, because nobody else is going to do that for you. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. So first of all, we took the opportunity on Brent crude oil on the breakout to $78 per barrel on Friday to lock in another 600 points on our long positions that we sniped in just below $72 per barrel, and also positions on at $73 per barrel as well. So of course, for every 1 lot contract you'll be trading, that's $6,000 a profit. For every 10 lot contract you'll be trading, that's $60,000 a profit. That trade delivered just within the week and a half, so it was a lovely opportunity to again rinse and repeat the cycle, buying back at the swing lows here and then taking advantage of the pump that we had last week, especially later on in the week after Friday's non-farm payroll, taking us back towards $78 per barrel. This is really the game plan at the moment on many of the commodities that we're trading, is we're looking for opportunities here on any revisits back down towards the swing lows to come in and buy at value here at key areas of liquidity. So some markets are definitely put on the radar here, one being palladium. So palladium at the moment is trading very close back down towards the 4.5-year lows. If we were to have a sweep and come back retesting that liquidity, it would definitely be a zone of interest here, back down towards 1,200 US dollars per ounce. So I would definitely have palladium on the radar here as we go into next week. Very similar with platinum as well. If platinum also was to come back down, sweep the recent swing lows, come back down to $900 per ounce or lower, this is very much an area of interest. We're almost back at the swing lows here that were tested back in February and also more recently right at the end of June. So this is absolutely a market that I've got on the radar here. Typically these markets, they're doing very well once you progress beyond the middle of July and certainly into August. Now moving over to gold as well. So as you know, gold, we've taken opportunities here to sniper in on retest back down towards the swing lows. Very much rinse and repeat here. If gold was to have another move back down to liquidity here, retesting back down towards 1900 or lower, absolutely I'm very interested in topping up and adding further trades. We've already sniped into gold, but if that was to happen, I'm a buyer of this market if we do get a retest back down towards liquidity. Equally, we may start getting that momentum as we build up throughout the rest of this week and into the middle of July here, in which case we'll do very well on this market. But I'm definitely looking out for any opportunities, any dips back down to the recent swing lows to add further exposure. Copper as well is another market that typically this time of year, normally it would be under a bit more pressure as we head into CPI data on Wednesday. So ideally, we would get a further push lower on this market because I am looking at opportunities to top up here as well. If we were to get a revisit back down towards the recent areas of liquidity here and swing lows that were tested right at the end of June, at the end of the quarter, where we had profit taking for the end of the quarter, halfway through the year, and subsequently we're starting to get a bit of pressure at the moment on Monday. So if we can get another push back down towards these recent swing lows, definitely that would be an area of interest for this market. Likewise, I would have silver on the radar. Very similar game plan across these precious metals at the moment. If they break out from here, we'll do very well. We've got plenty to capitalize on. But if silver was to get a break back down, coming back down to the levels that were revisited at the end of June here, again, these are going to be areas certainly of interest for us to look at for an additional position on the precious metals here if that was to occur. Equally, if we start breaking out to the upside here, then you're going to see multiple commodities start their move. Finally, you definitely want to keep an eye on gold here between that 1920 down towards the 1890 zone. So again, we've got CPI data that's going to be on Wednesday. Any pushes back down into this zone, I'm definitely looking to sniper in to capitalize. Historically, the CPI data that we have on Wednesday, that can be a huge catalyst for breakouts on the precious metals. If you go back over the last year, quite often CPI data has seen 500-point moves for gold. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. And most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, then the odds are already stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive, research-driven approach that is never taught to retail traders and only reserved for professional traders in the banks, hedge funds with access to powerful game-changing insights, including where the banks and hedge funds, they're buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, alongside the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, and intermarket correlations, then you need to join our mentorship program. As we head into the second half of the year, we are in one of the greatest eras of wealth creation the world has seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.